In our centers, we're looking for more food and beverage and experience. It is done in different ways because we have different type of shopping centers. So even in some convenience centers we own and manage, we do try to find more ways to add food and beverage. We also have examples now where we have requests from the supermarket operators to also offer some food and beverage to sit down there and making restaurants places. So that is also a new trend we are seeing. And indeed, the quality of the food court or the different places we see around, it's not only about the quality of the seatings and the design, but also the quality of the food is becoming far more important than it was previously. Okay. Yes, I think the pop-up is really something that will continue. I think it was, of course, a bit of a testing period, but we do see that it is continuing. It's also a continuing concept in our leasing, so we will have new and refreshing those pop-up stores every time. I think another trend we are seeing is that there's more a mix between the retailers possible. So also the luxury retailers, for example, are now also increasing their offer for affordable luxury, just to reach also a broader consumer group in our shopping centers. So it's not longer more the luxury retailers opting for just a separate place in our centers, but it's far more the interaction between the brands.
The property industry structurally is changing. It has had to for F&B. So in the old days when everybody talked about strong covenant and lease length and high rents, they got the same operators. So you got the same people all the time. Now, whether it's pop-up or what we call RWTs, which is restaurants that are built by landlords that don't have a tenant, and the tenant changes once a year, and it's like a film performance, they're only there for a short period of time. Whether it's pop-up or not, the key thing is it's changing the way that the consumer can buy. And it's there for a period of time and then it's gone. So it's like a concert. It's like a circus display. It's there for a period of time. It therefore does much more business because of that. And then it changes to something else in food. And our industry, the food service industry, is ready for that. You're not. The property industry is absolutely not ready to make that change at the moment because it needs long leases. It needs covenant strength to support. And so you have to change the mix. You have to have high risk with low risk and blend. You have to have long leases and short leases and blend. You have to have creative and new mixed with confirmed and normal. Then you start to build something that's sustainable and long term.
I think this requires a different view through the whole chain in real estate. So from the valuers up to the landowners to the, yeah. So I think, but we are increasingly seeing that. So if you, for instance, talk to the valuers, they are already saying that it's no longer really that you need to have a very long covenant in place. If you can provide the evidence that the retailer or the operator actually is doing well, this doesn't have to have a negative impact on values. So I think we're seeing some changes here and there, but I think we're still long off from this ideal picture, if you would say. And I think it also depends on locations. So for instance, also retailers, not everywhere they want to have shorter leases. I think there's also an important trend that retailers in the best locations, like in your streets, they want to have as long a lease as possible. Also because, of course, that allows them to not have competition around or to have secured the best places. So I think this is definitely a trend. It doesn't play everywhere in every situation, but I think especially creating new experiences and change in the environment, that is going to be a constant.
I think, on that point, we're seeing a huge increase in owner-occupiers. You look at Bond Street now, about 30%, a third of the street are owner-occupiers, and they're either sort of pricing out competition or they want to take a long-term view of their capital value as well. So I think that is a trend I think the West End and city centres around the world are going to see over the next decade.
It depends on where you are in the world, but companies like Westfield, you would mention them, companies like Unibail, they understood what they didn't know. And I think the biggest step in getting to understand hospitality in the widest sense, food and beverage, how to look after guests, is about acknowledging that you don't know what you're doing and that you start to make steps towards understanding how to build things. So instead of building a shop and then deciding to call it a restaurant, you actually build something that looks like a restaurant and you tenant it to a restaurant operator. And so I think those organisations started that process 9-10 years ago. And so they're ahead of the curve. But they need to keep investing in that. There are others that are coming quite late to the party, but are coming very quickly. So I think that it depends. It's quite a small community, isn't it? You wander around this sort of event, and it's the same people. They're not necessarily in the same companies all the time. So the knowledge is spreading. But without doubt, I think there were seminal moments in the industry where Westfields opened, where Unibail opened, Mall of Scandinavia, for instance. Did anybody know that the restaurants there are designed to have hard surfaces on the walls so it bounces the sound of people having fun into the mall? You know, that's what I call smart design, yeah? So I would hold those two up as good examples at the moment.